Still on the second part and on the trading strategies, the Kinjun Tenkan cross plays a very important role as it signals a weakening in the previous trend. So if the market was trending to the upside in a bullish market, then a bearish cross between the Kinjun and Tenkan implies that the Kinjun goes below the Tenkan line, and there you go, you have the cross. This is a signal not necessarily that the market is turning from a bullish market into a bearish market, but it is a signal that the previous trend is about to turn, or at least is weakening, and a consolidation area or a range it is trying to be formed. Opposite to the previous subchapter, a bearish cross happens when the Kinjun and Tenkan lines are crossing after an upward trend, and like the name suggests, this is a bearish signal for the overall market. Please remember what a trending environment for the Ichimoku indicator means. It means Tenkan above the Kinjun, cloud to be green, and so on and so forth. And when price is trending, this should always mean Tenkan is higher than the Kinjun line if the trending is to the upside, or Tenkan is below the Kinjun line if the trending is to the downside. By the time Tenkan crosses the Kinjun line to the downside, this is called a bearish cross, and the example you are seeing right here in front of your eyes. Such a signal should be considered as it shows a concrete shift in market sentiment. Of course, the higher the time frame, then the more powerful and stronger the signal. One cannot make a comparison between the 5-minute chart, for example, and the daily chart or a monthly chart when such a cross is happening. Now, if you go on the current market here, so this is the current market, and this is a 1-hour chart. Of course, we have a bullish cross here, so let's mark the bullish cross. Actually, let's try to look here at the bearish cross. So this is our bearish cross, because the chapter is regarding the bearish cross, but the same is happening on the bullish side as well. But if you go on, so we had a bearish cross on the 1-hour chart, but if you go on the daily chart here, let me clean the screen. So if you go on the daily chart, that bearish cross was actually confirmed even here on the daily chart. So what does it mean when you have a bearish cross? This is the euro-dollar daily chart. It means that the initial trend, or the previous trend here, okay, so the previous trend here, it is weakening. It doesn't necessarily mean that it is done, but it means that it is weakening, and you should look for confirmation from the Chinko. Now, we don't have a confirmation from the Chinko here, and you might wonder why price reversed right here, right now. Well, it is reversing because the Chinko is touching the support here, the 4th level of support, which is the Senko A here. A Senko B, actually, because the cloud it is red. Whenever the cloud is red, there is the Senko B, and that is a possible bouncing area for the Chinko. So Chinko bounces here, it means 26 periods ahead that price is bouncing as well. So we had here a nice green candle with price bouncing to the upside. What's also important to note here is that at this very moment of time, we have no resistance for Chinko until, let's say, it's coming 8, 9, or 10 periods ahead, and that would mean 10 days ahead. 10 candles here, 10 days means almost 2 trading weeks. So it should be let's say a range established until next week's FOMC data. So basically, if you want to play a range with expiration, end of week expiration, or 2 weeks expiration, then this range starting with 3250, not necessarily 3258, but I would say 3203, or even this 3240 and 131, let's say 131 like it was here. That would be a nice range to trade the one touch option. This bearish cross that you are seeing on the euro dollar, it is not confirmed by market yet, like it was this one here, not confirmed by Chinko, sorry, like it was this bearish cross here. So this bearish cross, it is being confirmed by Chinko here. So from this moment of time, 26 candles, this is a 26 candle, market still goes for something like 129 till 128, 27.50, almost 200 pips. Market still goes to the downside for this after this bearish cross is confirmed. It is not confirmed here, so we're looking at possible either change in trend or at least consolidation until FOMC. As you can see, this is quite a bearish environment, as we have 1, 2, 3, 4, 5, 6 candles, 6 candles for the euro dollar to the downside, 6 consecutive red candles. But until Chinko confirms it, we are basically still looking at a bullish environment. Not necessarily a bullish environment, but not a bearish environment as of yet. The logical thing to do when looking at a bearish cross is to start considering proper places to initiate short positions, as depending on the time frame analyzed, such a thing might happen to be best to do. For example, if looking at this daily chart and seeing such a cross, the Kinjun now turns into resistance on any attempt to the upside. So any attempt to the upside price may make, this should be a first level of resistance, and if price goes that high, then employing in short-term buying put options, with short-term, this being a daily chart, so with I don't know, either end of day expiration or with even lower expiration dates, that should be the way to go. Not bullish or not buying calls, but looking for shorting the market. Most likely the outcome would be that the price would be rejected from such an area. With this, I am ending this this subchapter with the bearish cross between the Kinjun and Tenkan lines, and it is time to move forward. So we did, under the second part, trading strategies, we did the Kinjun Tenkan cross, the bullish cross, and the bearish cross, and now it is time to move on to the Kumo being the cloud, and trying to see what strategies can be employed. We'll look at selling the Kumo top and buying the Kumo bottom, and basically what are the prerogatives for doing such a thing. So please stay on the next recording.